I want to actually prove a point to you guys and make you guys understand some things. Where is that level? Okay, it's this guy. You see, I'll be explaining something with this guy and this guy. I want you guys to pay attention to it. Most all these things, you know it. But like you all know, I will always call your attention to important things because simple mistakes actually kind of cause big problems. Now, what is the rule of protected highs and low? It is when you have a liquidity and the market take the liquidity and a break structure. Liquidity probably from previous session, blah, 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 or from external liquidity. Looking at this price action, we have a previous session liquidity, we have external liquidity, and it leads to a break of structure, which makes this guy seems to be a strong high, but it is not. It is a strong high, but the transaction failed at a point, which is why I will never sell this guy. And I will explain. I will explain why. Let me give you the perfect explanation now. And I want you to pay attention to it. Pay very good attention to it. Now, we have this low originated this high. This low is supposed to create a new high, but it failed and it dropped. And this point is the last point of redistribution before this guy was broken, which makes this guy what? Your violation block. Let me draw it out. We have a high, low, high, low, high, low, high, low, high, low. This is what we have. A low to a high, a low, pay attention to what I'm about to say, to a high. Now, this guy got broken here. This guy got broken here by this guy. Now, the ideal price action, I see a lot of things on social media that a lot of people, they do wrong, but they don't even know. Inducement is supposed to be like this. Sorry, inducement, external liquidity and sell. But you will see them doing something like this. And they expect this guy to get broken and still sell. Like, I don't understand. The only thing that can make this thing happen is probably as a characteristics of this guy. But let me continue with my explanation. Now, sorry. Looking at this price action that I drew out here, this point is our violation block. So if this guy is my violation block, my sell must be coming from this guy. This is where the sell, even if a sell wants to be valid, this is where it should come from. Right? That is number one thing I want you to know. Now, if the market now escape this guy like this, don't even try to say you want to sell this guy. The only thing that is ideal for you to do is what? Is to flip it and buy from here. Not trying to sell because there's a fair value gap here. This guy has been breached by this, and the price action that flipped it needs to be reclaimed. And that is why this sell failed. And this thing is important because it's I was caught up in it, and a lot of people online does not even understand it. So which means the buy in this price action is here. After this inducement, this is the buy, not selling. Then after the whole liquidity has been taken as a form of major liquidity, then you can sell. Then after selling, this same point will be reclaimed again in the future to continue the sell. Now, let me now go to the proper one. Look at this. We have market took out liquidity right here. Then look at what happened. We have the same thing here. This guy is this guy. What price action broke it out? It is this guy. And he mitigated it immediately. Boom. So mitigating it, because he took out external liquidity, does not necessarily mean market will not get there, it will sell. It will not. But you can capitalize on that trade in two ways, which is if it has the rule that I told you, either a very big, a very strong candle that manipulated this guy before a yama, then you can sell it. Or it has a small one, then a very big engulfing one. Having a clear what? Fair value gap, then you can say you want to capitalize on it. But looking at this price action, this order flow right here is complete. The only order flow that remains now is when this guy got violated and the price action is here. And the price action already got violated. They did not respect it. And like we did here, flipping it all over here, you can see what they did. As soon as they manipulated this supply, they flipped it and they retest it immediately and start buying. So instead of me trying to sell this thing, you will just see me that come and buy this thing. Then you'll be surprised that how come I buy this thing? You'll be saying me this is not a protected eye. You need to understand a successful transfer rule, and you need to understand the rule of reclaimed transactions. You need to understand it. If this guy is responsible for a manipulation, this is the protected eye now. This guy is where you should get a reaction from. Anything that makes this guy fail, the only thing that you are expecting is you want price action to be like this. The only reason that can make you sell is, let me show you. You have, let me draw this price action now. We have high, low, high, low, high, low. External liquidity, drop. You now have, this guy is supposed to sell. Market now come, reacted, take it out. The only thing that can make you sell, if these markets break back down, then start a new cycle, then you can sell. But so far, it did not break back down. Rule number one. Rule number two. So far, you see that it has a full body candle close, like this one. Then it is not an inducement. It's not going to sell. And if it's going to sell, a new price action needs to be formed. So once you see a full body candle close, 1, 2, 3, above it, it is supposed to be like a wick. If it's an inducement is supposed to be a quick thing that will take out liquidity, not something that will close above it. So once it closes above it, this guy has become what? A breaker block. And it has become a reclaimed block. They ignored it here, and they ignored it here, and they will reclaim it here. Guys, am I making sense? So you can be like, okay, this is an SNR liquidity, blah, blah, blah. This guy, yes, you can say you want to sell this guy from here. But even if I try there to do that, once I reach this guy, it's either I edge or I just break even. Because I know I have a threat right here, a very valid threat. So I would rather edge a buy right here and leave myself. Any one of it is going to win. Or I will just break even. Or better still, I will just wait for price action to show me sign. Because this kind of price action hardly just fly. Even if it fly, it can fly halfway to this guy and still come back to mitigate and now sell. So I don't always rush it too much. Once order flow has been breached, you have to be careful about picking an imaginary POI above, no matter how beautiful it is. Because this swing creates this swing. And this price action is the real violation block, the major violation block. I'm sure you guys understand what I'm trying to say. Like, if this guy is the swing low, and this guy is our swing high, where is the last reaction that took out this guy? The last reaction happens here, not here. So we should have this one do its thing by mitigating this guy. Then we have a break of structure before pulling back. then the market can come again and now sell. Because order flow is printing, money transfer is developing. But they ignore this mitigation here. They have to reclaim it, my brother. Guys, am I making sense?
Yes, boss.
So I felt like I really need to address that. So even though it might not sound as important, but trust me, I'm telling you, it is as important as a lot. Because let's say I take a loss here, my brother. Right here. I am winning my money back immediately, and I'm not even joking. I'm going to flip this guy. I am. I'm going to flip this guy. I can set my TP at 1-to-1, risk to reward, just to break even my trade or put it at 1-to-2. I will make my money back from the flip. It hardly fail. You need to understand order flow, and you need to understand flip zones. So whenever you're analyzing your chart, if you cannot keep track, always make sure this guy, you mark the demand. So this demand that failed, that is your reference point. Anything above it, you have to be careful, because once they trade above it, that reference point has become a supply flipping to demand. So anytime you have a demand somewhere that is valid, whenever it fails, don't just delete your POI. Make sure you keep something there to update your eyes that there is a flip, there is a violation in my price action. So you need to be careful that it's either you reclaim it, because they failed it here, 1. They failed to reclaim it, 2. This is the 3rd time. They can't just keep ignoring it like that. They failed to buy here, failed 1, failed 2. They did not reclaim it. This guy would hold. It would hold, my brother. Okay? Am I clear with that? And another thing that I want you guys to always do is, when you are making your analysis, yeah, always make sure at any point in time, for visualization purpose, whenever you have a range, I'm talking about people that does not really have not perfect the craft very well. Whenever you have an unmitigated range, any point closer to where price is, always make sure you put something. Even though price is not there, always make sure you put something there to indicate that, okay, oh, as at this point, oh, there's still an unmitigated transaction there. As at this point, oh, there's still an unmitigated transaction there. As at this point, oh, there's still an unmitigated. So in the future, market can just rally and tap into it directly. You will remember that, oh, this is an unmitigated range in the past. So if you had done that for this guy here, when I explained it to you guys yesterday, you will have known that this guy is an unmitigated range. So when market fly there, after taking this inducement, and you start seeing reaction, you will not just be like, what is going on? What is going on? Because you are already prepared. So that's what I want to explain to you when it comes to that range theory. It is not only where price is that you should care about. Any unmitigated range in the past closer to your POI, always put, you might just put a black, something like this, or a yellow, or a red, to indicate that there's an unfinished transaction here. So in the future, market can just tap it and give you a very quick reaction. Then you will just capitalize on it, because you know it is not coming from a random area. It is sponsored. But if you did not actually keep note of it, you might not keep track. You might not be able to remember, because you didn't pay attention to it before. It's only some of you that have mastered the craft that can easily see that, oh, this here, okay, market is not just random here. It's actually feeling this incomplete, unmitigated range that is sitting down here. So for somebody that is just starting up, have something that would just remind you of that thing. So whenever you see it, whenever market just tap into it, you will know. Or whenever market is cooking up some kind of price action, you will know that, okay, this price action, it looks like a trap. Then where is it most likely to go? It's probably going to go to the continuation of that pattern or go to the incomplete range that was existing before. But if you have not kept note of it somewhere, you will not keep track of that thing. You might be saying that you want to buy from here. But if you cannot be saying stuff like this and you have your unmitigated range in the past sitting around here that you've marked, that thing will tell you that, bro, don't engage you. Don't engage you. You have to come. It might come to this range. So once you get to this range and you start seeing some sort of break of structure, then you are interested because it's not just coming from a random point. It would call your attention to potential mistakes or to potential liquidity buildups. Am I making sense, guys? Huh?
Yes, sir.
Sure.
Now, let me now quickly talk about the Quasimodo. Using this same reclaim thing, this same reclaim yama thing that I just explained now, I will use it to explain Quasimodo for you and how to perfectly trade it and flip it. Now, this is the Quasimodo everybody know. Inducement, boom, then this guy. This is what they see, head and shoulder. It works. So far you make money with it, it works. Now, let me now tell you the ideology behind it and why this mitigation must not even go too far. If not, they will just say that they will induce the Quasimodo and drop. Let me explain it to you quickly with this 5 minutes that is left. Now, this is Quasimodo now. I know. Inducement. But we all know that this inducement is a swing point, which means it is also a supply. But we know it's going to fail because we know that this is a trap. Now, market will come. It would what? React, then take it out. Once it take it out, now, there are two ways to get in, like I told you guys. There is Quasimodo inside Quasimodo. I'm only using that word because that is the most popular word. The first Quasimodo that is most high probability is this one. This one here. Immediate one, and you sell it to target this guy. But the one that, this is the immediate one, right here. This one is like this. High, low, high, low, high. Inducement. Then you have Quasimodo, they took it out, then you are expecting this happen. Now, where is your POI? People think this guy is what is giving you that POI, and the answer is no. Your real POI is where? Is this violation block that got flipped. Because when this guy got ignored right here, they are supposed to retest it. It got violated here, 1. They are supposed to retest it here, but they did not. Violated, 2. So, which means this guy is your POI. It has nothing to do with this eye. This reaction is the POI. So, which means once market get to this POI here, let's say you just get there like this, and you're expecting it to sell directly. That is the expectation, which is nice. But let's not assume market does this. High, low, high, low, high. Then you have this inducement. Then market come. Quasimodo, boom. Then it came. Then you mark this guy. Then the market come. This is the POI, not this upper one, my brother. It is this guy that invalidated this price action. Now market come. High, low, high, low, high, low. Then he get to this POI, then he does this. And he go above it. My brother, if you sell this Quasimodo, if you sell it blindly, you will lose money. But because people that are setting limits, they just want to like capitalize on it quickly. They don't really have that patience to wait for lower time frame confirmation. If it move directly from this guy, it might work out. But once it trade above this flip zone, there are 2 things you should be expecting. You see that it does this, boom, to the upside. Or it does this, it failed to create a high and it creates a low. Then you can now sell this key level right here. to continue your trade. So which means we have this is a Quasimodo, but this mini Quasimodo is how we trade our inducement that you guys all know. Quasimodo inside Quasimodo. This one is the expectation of the person that is trading this one, meaning you just want it to mitigate directly and drop. But there are things that you can do inside this mitigation that can even increase your win rates. So which means even if you are entering from here, you can save yourself by putting your stop loss here. You will have a higher win rate compared to somebody that is just setting limit directly from here with thousands of stop loss. When you don't even have control over that price action, it means you are not even trading a story. You are trading that pattern. But a lot of people will choose just to deceive themselves. If you are trading a story, then you should wait for this to tell you a story too. Which is, okay, what is going on in this breakout point? What is going on? So if you are traded this one, then in a bigger picture of this one, you will be having high, low, high, low, high, inducements, Quasimodo, inducement, blah, blah, blah. Then you have gotten from here at first, but you take your TP. But the person that is waiting for this one does not know that all you are just waiting for is you have taken your TP here, but you see this as an incomplete pullback, but you took it because you understand the rule. Now, he think it's Quasimodo that is playing now, but he does not know that this is just as a result of this incomplete pullback, market come and it mitigates. So you have capitalized on this, number one, and you're also capitalizing on this. So you are making money from the build-up of the Quasimodo itself. Guys, am I clear? Am I clear, guys?
Yes, boss. Yes, boss.
Yes.